Hello and welcome to BQ Prime. We have with us Mr. Sandeep Kumar Gupta, the Chairman and Managing Director of GAIL India Limited. He will talk to us about the company's financial performance in FY23 and quarterly, as well as about the company's growth plans, green transition plans. Welcome to BQ Prime, Mr. Gupta.
Thank you.
Sir, we have seen this in FY23, you had one of the best performance as far as the revenues were concerned. But operationally, we have seen that there were some weaknesses. So what could be the main contributor for this dismal performance as far as operations side was concerned?
As you are aware that this year witnessed very high gas prices, in fact the unprecedented high gas prices. And because of such gas prices, there was a disruption in the long-term gas supply contract also.
Right.
Now this high gas prices and such disruption, in fact, adversely affected every business vertical of GAIL India Limited. Be it trading or be it transmission, be it petrochemicals or liquid hydrocarbons. And because of the high gas prices, there was some APM gas also which was reallocated for our LPG processing. So it also had the adverse effect on our LHC segment. So this was all these reasons, primarily high gas prices and the disruption of the long-term contract was the reason for lower profits in this year. But fortunately and good for us that all these issues are now sort of resolved as the gas prices have largely normalized and the supplies under that contract have now resumed. So we hope that one, that such adverse effects will not be there in this year, and second, there will be growth both in trading as well as transmission segments in this year, which definitely will pave way for perhaps a very, very good performance in the year 23-24.
Right. So we have seen that the inventory for finished goods and also cost of material consumed, they had almost gone up as much as 6 times. So what exactly were the part of that inventory of finished goods?
No, we do not keep any excess inventory. You are aware that our inventories are carried through the by line packs which are available in our line. So it was primarily a factor of high prices.
High prices.
And definitely with cooling of the prices, definitely that working capital will get de-logged from the...
Right. So another contributor that you all mentioned was Gazprom long-term contract that you mentioned about. You also spoke about during the conference that you all have approached the UK court for arbitration. So can you elaborate a little bit more on that?
The only thing that we believe that the force majeure which was alleged by our supplier was not as per the contract, because as per contract it was a portfolio contract and they should have supplied by sourcing gas from other geographies. So we have taken up to press for the specific performance under the contract and for damages which we had to incur during this period due to non-supplies.
There was mentioned that there were some 40 cargoes that were supposed to come under that and almost 29 didn't come. So what could be the damage that you would be looking for? Is it close to $1.2 billion is what
no, I would not like to give any number as of now because our claims, the monetary claims are yet to be filed. But yeah, total disruption till date is of 30 cargoes under that contract.
30 cargoes. And now you're saying that the supplies have resumed?
The supplies have resumed. Last 2 months we have received full supplies and we hope to get similar supplies in future months also.
Okay. So as far as your long-term contract to short-term as in spot is concerned, what is the ratio that you normally work on?
We have a very healthy portfolio of 14 million ton of long-term contracts, which is approximately 50% of the total requirement. And considering that the demand in the country is definitely has to grow in the times to come, we are also scouting for additional long-term contracts from various geographies wherever the additional gas is available.
Mostly in US is what you're looking at?
US is there, Middle East is there, so we are scouting for various options.
Okay. And you also mentioned that you have a plan for electrolyzer manufacturing, which is commencing in this calendar year.
No, it's not electrolyzer manufacturing, but green hydrogen production through electrolyzer.
Okay.
So that plant is coming up at Vijaypur and we hope to commission it definitely by the end of this calendar year.
Okay. And you had mentioned about this blending of 5% of hydrogen to natural gas. So is that process already started, or it's something that you are still working on?
No, it is started sometime back with 2%, and now we have ramped it up to 5%. This is at Indore through our Avantika Gas joint venture. And this has been blended into the pipeline, and now we are studying the results of this blending on the pipeline metallurgy and on the consumer assets, etc. And hopefully there will not be any adverse impact, and then based on the study results, we will ramp it up to higher levels with necessary statutory permissions.
Okay, but how much you expect that blending can go up to? Like we do for ethanol into petrol, So similarly, what kind of blending we can look, in terms of hydrogen with natural gas?
Some studies which were done earlier by Indian Oil, where they blended, where they supplied HCNG in Delhi to the DTC buses through IGL. There, the blend ratio, they proved that the blending up to 18% by volume is doable. So, but then that did not involve pipelines.
Right.
We have to study the effect of blending on the pipeline metallurgy.
Right. So this test you are doing with IIT Delhi or
IIT Kanpur.
IIT Kanpur.
Yes.
So by when you expect to finish this?
So this definitely the results have to be studied over a long period of time, and then only perhaps the results.
And in terms of your this capex plan for FY24, last year you said you had some 9,100 crore as capex. So what's the capex that you have planned for FY24?
We plan to do a capex of about 10,000 crore this year on the strength of the spend which we have to do on the pipelines, on the petrochemicals, and also on the new acquisition, where we have been declared successful resolution applicant for JBF Petrochemicals.
So this will be just for JBF and
for combined together.
Combined together. Okay. And how do you see FY24 for GAIL? And also in terms of the tariff which was increased, the integrated tariff to 58 rupees. So how much that will impact your profitability in FY24?
This tariff revision, which was in fact due, because this is a periodical revision which has to happen, will give us an additional margins of about 1,400 to 1,500 crore. And this 58.61 in fact is about 10 rupees less than what we had submitted to PNGRB, and we have filed a representation for revision, further revision. So let us see what happens. But with this revision, with increase in the transmission and the trading volumes, with ramp up of petrochemical to normal levels, we expect that this year is going to be very robust, and we are looking for a PAT of about 9,000 crore on a conservative basis for FY23-24.
And if your this application is accepted for 10 rupees hike, that you had asked for 68, so if that is hike, then what is the kind of impact on profitability?
A full 10 rupee impact will have another 1,500 crore impact based on the increased volumes also.
Thank you very much, and congratulations once again.
Thank you.
And best of luck for your next.
Thank you very much.
Thank you.